There we go. Okay. Wait a second. Is that not working as much as I want it to be? Let's see. Fit the screen. Hey, Zach, we're happy to see you. Hold on one second here. Maybe that's going to work. Not totally sure. It might not be anything special, but let me just check something out on my phone as far as the stream is concerned. I want to make sure it looks okay. Oh, let me see. Mamacita. It's kind of weird. I have to watch my own stream here. There we go. I just want to make sure this is all working. My videos. And then let's go to my channel very fast. Make this nice and easy. My channel. Is it not showing up? Oh, here it is. Okay. Sorry about this, guys. Oh man, I gotta watch an ad for Udemy on my own account. Okay, there we go. Oh, it's working. Okay. Sorry guys about that. So what it looks like for me on my YouTube screen is it looks like there's massive black bars above my head and below my head, but I just looked at my phone and it seems to be working okay. So I'm gonna let that slide. But for some reason it looked like kind of weird. So kind of a brief little start here before we go into the horrible market. I just got finished up doing some trades today. I really just did like a 2-hour walk with Loki as well. So I'm kind of beat from that. But economy is not looking so hot. Inflation was hotter than expected. It's not good as well because that really gives the Federal Reserve a key metric to just say, hey, we're going with a 75 basis point rate hike. There was thoughts they may go to 50. Maybe inflation was peaking. Yeah, not so much. So, and part of that is with the government really, the government's still spending quite a bit of money. The supply chains are getting fixed up, but not fast enough. And with the railroad strike, that's going to make things a lot worse. So let's kind of dive into the charts here and kind of see what's happened, some of the levels of resistance. I wasn't able to stream yesterday because I wasn't feeling too good. But I did put out a video yesterday morning and I was telling you guys here, let's see. And hey Garcia, hey CK, hey Jim Bob, hey E-Trev, happy to see you guys back. Let me go over here very fast. So if you guys watched my video yesterday morning, I told you guys about this level of resistance up here and how I personally thought it was better to be scaling out at this zone rather than trying to buy in. And I put in the caveat there, if you guys did want to buy in, you guys were really going to wait for some type of pattern breakout. If you guys go over here to the 15-minute chart, lucky for you guys, there was no real pattern breakout here. So you guys, excuse me, weren't forced to make any bad trades, hopefully, right? Now, you guys can see people were looking pretty optimistic heading into CPI, but once the CPI data came out, I mean, oh gosh, guys, we just came down very hard. I think on the other stream, I have a level of support here that was to help you guys out if you guys were taking a short-term position. I think it looks something like that. I believe it was maybe on the 15-minute chart. It kind of worked out. Yeah, there you go. So you can see where we kind of hovered for a few seconds and then we bounced and then we kind of came crashing back down to this next layer. And that next layer actually is there like a good point where that next layer is right here? Not really. We just kind of stopped, did a hard stop there. Okay, probably something to do that on a different time frame. So, excuse me, guys. I'm gonna still be a little coughing after COVID. But let's kind of talk about some of these next levels of support and what we can be looking at for the next few days as far as Bitcoin's concerned. But before that, I do want to stress to you guys that the stock market, just like the crypto markets, are not looking so good. One of the interesting things that we've been looking at as far as Bitcoin, that's a different Bitcoin chart, Bitcoin and the Nasdaq here, is when Bitcoin crashed down a few days ago, it came really close to the lows we experienced over here in June. Well, as far as the Nasdaq and the S&P and the Dow, they really didn't come as low to those June lows. See, way over here, we're still very much higher. So we're looking at a possibility where if the Nasdaq or the S&P, whichever one of these indexes you guys use to kind of see, hey, if the Nasdaq's going up, Bitcoin's going up. If the S&P's going down, Bitcoin's going down. If you guys are using these, like, you can use both, one or the other, doesn't matter. One of the things here that's kind of troubling is if we go and retest the lows from June from a Nasdaq perspective or from a let's just call it a perspective of or excuse me, S&P 500 perspective, that could very well mean that Bitcoin in that same time frame is actually breaking down below that $17,600 support level. Okay, and what I mean by that is this. Well, at this point, maybe we'll be looking a little bit better. That's about a 13% loss. The Nasdaq has to go about 8%. Usually the Bitcoin's going to fall a lot more than the Nasdaq. So if the Nasdaq's falling that 9%, Bitcoin could be falling about 20%. So that could be a pretty big thing you guys got to keep track of here. I thought we might have an opportunity to break out above the 20-day moving average here as far as the Nasdaq is concerned. No, we got slammed down. I believe we would have broken out above it actually if it wasn't for inflation data. But unfortunately, guys, we're getting rejected, and now we're heading into a death cross. The first death cross since we, excuse me, the first death cross since April 27th. As you guys can see, that really cemented that downtrend here. So we got to really hope that we were able to hold these levels, guys. I mean, this is the crucial time here. And one last caveat before we go look at the SPY for like just a couple seconds here. We are still very far away from the 200 weekly moving average, but we are getting dangerously close to having a death cross here. What I'm going to do very fast is just take away the chart, which kind of seems weird, so you guys can see the moving averages here. We're getting closer and closer to the 20-day moving average, starting to drop down below the 200. Now, if we go along the same path, actually, let me put the chart on here. Let me see how aggressive this might get. If we're going after the last 20 candles. 30 candles, 20, 20, 20, 20. Okay. So we're going to start replacing candles around the $14,000 mark, and we're going to be replacing them with candles around the $12,000 mark. So that actually is a pretty steep drop. So if we just go right here very fast, just so you guys, I can show you guys a little bit better. Let's just saw about like 12,300. That's about a 12% drop. For each new candle, that is going to be pretty big for this moving average. Now that I take this back off here, we had the death cross over here. I told you guys about it. We all knew the market was going down after it happened. But now we're getting closer, just like Bitcoin, to having a death cross here. And actually, I haven't taken too much time to look at the death crosses on some of these charts. So let me see. I mean, 2008 financial crisis, and then the dot-com bubble over here. And both had moving averages crashing back down below it. Yeah. Let's hope it doesn't come to this, like I said. But you're starting to see more parallels that something bad may be about to happen here. Again, this is a weekly chart, so let's say it could be months away, it could be half a year away. I won't put a direct time on it because we could always come back down, still do a double bottom on the Nasdaq and try to soar back up. That's always a possibility as we go into the holidays here. But we're getting closer and closer, and this doesn't look good. Historically, just like when we break down below this 200 moving average, bad things happen. But also historically, when the green line drops down below the yellow line, historically, that's also bad timing. And it looks like we may have an opportunity for the 50-week moving average to also do that. It looks like sometime, if we're really going to, this is like summer of 2023 territory for the 50. Okay, if we start to crash, of course, this will come down a little bit harder. So it might be somewhere towards the end of the year, Q4, Q1 of next year. We got some time to see how the market reacts. So nothing is set in stone, but this is just not what we want to be seeing right now. There was kind of this prevailing theory that inflation would be cooling off, and it's just not. I saw some news articles today saying inflation was going down. No, the inflation that most people care about, excuse me, it's like food and stuff, it's actually going up. And core CPI, so like regular CPI, you kind of see a little bit of a dip, so like we might be peaking. We'll see if we have to go back up after this month, right, or next month. But core CPI, which doesn't have food or energy, it's actually going like this. It had like a little bit of a cup and handle, it went down, and now it's going back up. So that's what's freaking everybody out. We might not have reached peak inflation. And the whole reason for this rally over the past few weeks is because we thought we hit peak inflation. So if we haven't hit peak inflation, then we're going back into this cycle of doom and gloom, which nobody's going to really want to experience, right? So one other thing here, you can take this a little bit. So with every major index right now, we still have these short-term levels of support right here. You can see this on the Dow. We still have a support level from right here. Nasdaq still have a support level. Oh, not as much actually. This is pretty volatile, bad day for Nasdaq. What's it down? Nasdaq's down 5%. Oh, Jesus, yeah. okay, maybe the Nasdaq doesn't have as much support, but the S&P and the Dow do have a little bit of support that may be able to help out the Nasdaq here. This is going to be a wild ride. This is better for, if you guys are trading this, it's much better to be a day trader in this market, just so you guys know, in and out. Maybe you want to hold for a day, maybe two, but you really want to be careful about this volatility here because of all the news coming up. And with the big railroad strike coming out potentially Friday. Friday is the deadline. If it doesn't happen Friday, there's going to be a big strike. Actually, let's talk about that very first. I promise we'll get to the main Bitcoin stuff here in a second. There's a lot of stuff I want to talk to you guys about Bitcoin. I got Fibonacci levels. I got Ganfan levels. I got Fibonacci circles on here. I got major supports. I got it all to talk about. So give me a minute here. But I learned something that was actually kind of disturbing, or not disturbing, but like it really surprised me, I would say. So here's what's going on in a nutshell. I'll kind of wrap it up in this way. I made a video talking about it. I posted today. You guys can watch that as well. But basically, we know that you guys probably don't know. There's 12 railroad unions in the United States. 12. Okay, 10 have made deals. A few days ago, when I was talking to you guys about this, I told you guys there was a chance that 116,000 railroad workers were going to strike. Now that number is somewhere closer to 60,000 railroad workers are most likely to strike here come Friday. There have been some deals. And I was like, okay, that's some really good news. Maybe things will get a little bit better. Maybe things won't be as bad. But then I was reading this Washington Post article and a couple of, excuse me, a couple other articles out there. Sorry, guys, COVID's still kicking my butt. But when I was reading this article, something really stood out to me. A lot of it just kind of fluff, kind of propping up the White House here. But here's where things got a little bit more interesting. Can I zoom in on this for you a little bit? And let's kind of move this over here a little bit. I can't. Okay, well, I'll just move my head over here then. All right, so this is what's important. And I know you guys don't like reading, but this is very important. So let me just read the whole thing, I should say. The Brotherhood of Maintenance of Way employees, a division of Teamsters, on Sunday announced a tentative agreement with the national rail carriers, leaving only 2 of the 12 unions without a deal in place. Only 2. But those 2 groups, representing engineers and conductors, are politically powerful and the 2 largest rail unions in the country. So only the big dogs are left, the ones with the most leverage. These are the people that really control everything. So this is the part that you guys need to pay attention to right here. And now it'll be red. Okay, there you go. The remaining 10 unions are expected to refuse to work in solidarity. So if there's no deal, these 10 are expected to refuse to work in solidarity, which means all 12 unions will not be working. I thought things might have been getting a little bit better, but they're not. So we're kind of in a pickle here, okay? So let's kind of talk about, excuse me, what's been going on over the last few days. I'll be using some metrics here like Fibonacci circles, Ganfans, support levels, resistance levels. Heck, I mean, we could even use the Fibonacci extension levels here, and I'll talk to you guys about that in a few seconds. Excuse me. Okay, so let's talk about this a little bit here. So if you guys watched the video a couple days ago, you guys know I was telling you guys this is more of a scale out level than a buying level. I told you guys, hey, if you want to have your first major level of support, use the 50-day moving average. That could be a good stop loss. And, you know, if you go over here to, let's just say, the 15-minute chart, and we take off the 20 and the 200, and we make this into a daily 50 moving average, you'll see that we kind of broke down right around here. And that was a good opportunity just to bail on any positions you guys might have had, because, you know, after that, I mean, we just kind of kept on going here with a slight stop at the Ganfan level, like we did over here. Nice little Ganfan support, a little bit of Ganfan resistance. We stopped there for just, I want to say, like a half an hour max, and then we were on our way back down, okay? Good load up zone, though, if you wanted to open up some shorts. Okay, but let me move this back to where it needs to be to chart. Let's add these back on there and these back on there. There you go. You can see how fast those moving averages are kind of crashing down here. But here, I want to do a short recap of what happened over the last couple weeks, just using some of the Fibonacci circles. I don't use the Fibonacci circles too much because you guys can see when I have all this data on the screen, it really does make everything just very cluttered, and very cluttered is not too good here, right? All right. So one of the interesting things that I think is still leading to us to a level of support, there are 2 factors here. On the weekly chart, you see this green line right here? That's a Fibonacci circle. And maybe I can actually change the background on it just a little bit so you guys can see what I'm talking about. There you go. You guys can see this line right here. That's a Fibonacci circle. We're still holding, even through the crash over here, we're still holding above it right now. The minute we crash down below that, or we close down below it, excuse me, it's not going to be a good sign, because we're kind of reaching this inflection point between two different Fibonacci circles. So you guys can see this one right here, right? I'm going to get rid of it in a second. You guys will just see the thin green line. But then we also have this one over here, right to the right, which is at, we'll probably come into contact with it the week of September 26th, so the last week of the year. See that blue line right there? Now you can see the blue. So usually when we come into contact with these levels, they're pretty nice levels of support. But once we start breaking through them, you start to see some pretty rapid moves in whatever trend you're going into. So if we're going up, usually it's a really nice uptrend. If we're going down, usually it's a pretty nasty downtrend. I don't know if I have a an example to show you guys on the fly, but what I can do is just open up another Fibonacci circle here really fast. I might have to square this, I guess. Yeah. So let's just square that. Let's get this right here. I'm not going to make it look pretty, guys. I'm sorry, but I just want to get this over with here. All right. Now let's put all these bad boys back up here. Again, it won't look exactly perfect, but you'll get the gist of what I'm trying to show you guys here. All right. So now as we go into this, you'll see we broke out above it. Okay, this is definitely not as nice as I would like it to be. Let me see if I can move this down a little bit. So basically this never actually broke down below this level the entire time. It's just my sloppiness. But basically a breakout there, nice move, a breakout there, nice move, a breakout there, nice move. And you can see when we actually broke down right here or came back down, it was support. And then I guess this should be up a little bit more as well. There you go. No, it shouldn't be, but whatever. You had some basic supports right here. See, we broke down it. We broke down below this one. Now we're testing out this one right here. That's what's going on, okay? And if we break down below this one, you know, then we start talking about 14,000. And guess what 14,000 is? It's in this next, this next drop zone right down here, 15,000 to 14,656, with also Gann-Fan support here as well. So we're kind of really close to that. And then you guys can see right here, I don't know if you guys can actually, but is there a way to make these lines thicker? I don't think so, but there you go. You guys can see we do have another level of support. If we were to go like have a really extended crash, that level of support might be somewhere down around 13,000. You buy up here and you kind of wait for the reversal to happen so you can make some easy profits there. So yeah, I mean, you guys need to be prepared for this if we do have a larger crash. I'm not saying it's coming. There's still a lot of news that can come out that can really change the dynamics. Some good news that we all kind of want to see is the railroad strike averted. We want to see the deal made between the unions and the corporations. We don't want the government to get involved because that will just get sloppy. And sloppiness is uncertainty, and uncertainty makes the market go down. Excuse me. Okay, so keep an eye on these, okay? You're going to notice that these are more accurate on the weekly chart as far as the Fibonacci circles. If you guys go over to the daily chart, you'll see that we came down, broke down below it on a pretty big move. It took a lot of force to break us down below it. But then we got support from this Gann-Fan level right here, and we managed to bounce back up above it, and then get, you know, CPI data rejected us off again. But we did have a pretty handy bounce off of this 2-to-1 Gann-Fan level right here, which is really nice. So if we back up a little bit, you can see these Gann-Fans kind of come from a whole bunch of levels of support. I was looking for more that might be coming back over here from 2015, but the angles don't work too well. So all the lines are kind of all the way over here, affecting this stuff. But the lines aren't really useful for some of these more modern times of 2022. The lines just don't go out that far, okay? But as far as Gann-Fans are concerned, guys, this week that support level we don't want to break below is 18,606. Next week it's going to be 18,836, and the week after that, as we kind of approach this Fibonacci circle, that's when we're looking at about, well, both these, the one right there and one right here, that's going to be around $19,000. So we do want to get a move on here really quickly over the next couple weeks to start going back up to really test out like 23,000, 24,000. We want to get up to those levels. And, you know, our saving grace here, if you want to think about like, hey, how can we survive this? You can have a lot of confidence, or just more confidence, I would say, if the Bitcoin price can simply just break out above the 20-week moving average. You can see it screaming down here for the first death cross we've ever had. You know, imagine that, the first death cross we've ever had. So if I go over here, you'll see it's about to cross down below. It's never happened before. I should probably go over to a different Bitcoin chart that has more data for you, though. There you go. So it's about to happen. It's inevitable at this point. Didn't happen here. Didn't happen here. And it did not even happen here. When Bitcoin lost, you know, like 86% of its value, it still didn't happen. Now, for the first time, Bitcoin's lost a lot of its value. We all know that. It's lost about 74%, not in the 80s just yet. But it's about to happen, and it's going to be pretty ugly. So excuse me, guys. It's going to be a roller coaster of a ride. I'm still bearish, as you guys know, but I'm not going to be like a supreme bearish guy. There's still a hope for a reversal. It's just not looking that good at this moment in time. Okay. Sorry about the cough, guys. Geez, COVID sucks. And I'm still kind of dealing with it. But okay, the majority of the market is down right now, everybody. You guys all know that. What I'll probably do is, you know, what is this? This is the main one. You guys can see the support levels I put up here on the other chart. We have some more support levels down here on 19,500 or so. But I think it's important for us to talk about some of these other coins. Oh, and actually one last thing here as we're kind of talking about this. I think this showed up. I don't know. Did you guys see this or not? Maybe. Here was a Fibonacci, a resistance level if you guys wanted to buy down here. I thought this one worked out pretty well. There you go. So I don't know if you guys like to use them as much as I do. I know I like to use these quite a bit. But if you use this smaller one, low, high, low, me being me, I did some day trading as we broke out above this one. I scaled out right there because honestly, it kind of rebounded really fast. And so I scaled out like 50% here, 50% here. And then like the dummy, it ended up going up even higher. We ran into the Gann fan light here. We ran into the orange line right here, the 2.618 of the Fibonacci extension. And then what happened? We got rejected off of the purple, which was the 3.618. So just going to push Fibonacci extension levels on you guys again. They're pretty darn useful. They don't work all the time, don't get me wrong, but you guys will hear me talk about these quite a bit, okay? Now, you know, as far as Fibonacci support levels, we're not going to really be honoring any of these because we just fell down so fast. Well, we fell down right there. See, that's where we found a little bit of a stop at Fibonacci support level. But I've been noticing Fibonacci extension levels, maybe because I've been buying a lot more than shorting recently. I still have my long-term shorts, and those are just kind of waiting at this point in time, right? Fibonacci extensions have been key for me to make some trades here. Okay. But let's, excuse me, let's talk about some other stuff here like Ethereum, Dogecoin, yada, yada, yada. So let's go over here to the daily chart, kind of talk, we haven't talked about Ethereum, I don't think, in a minute here. Ethereum is still in a good support level. We still have not broken down. We still have, you know, we're still in a decent spot. You know that when Ethereum breaks down, a lot of times it actually causes Bitcoin to fall down right after, which is not a good sign here. But if we go back here to Bitcoin very fast, you'll notice that Bitcoin also is oh, I don't want the line, I just want the trend line. Bitcoin as well has a lot of leeway here with that that big trend line that we're all watching. Excuse me. All right, some of the things you guys should watch out for as far as Ethereum is concerned. This is a smaller breakdown, which could have a pretty big impact as it may bring Ethereum back down below $1,500 for the first time in a couple weeks here since like the beginning of September. We did have a nice breakout here. That was kind of nice to see. It worked out okay. We kind of basically just broke out of the downtrend, went sideways, then we kind of pumped up slightly. We still have this death cross here, and at this point, it doesn't look like we're going to have another golden cross anytime soon. I still think it's kind of interesting that the 200 daily moving average on both Bitcoin and the Ethereum, it's still coming down, but whenever we get too close, we get rejected pretty darn handily. So I'm hoping that if we want to see the market go up, we're going to have an opportunity for Ethereum in particular, because Bitcoin's 200 is really far away. We want to see Ethereum break out above its 200 daily moving average and like bring up that 50-day moving average to have a golden cross, because that'd be the first golden cross since we're over here in 2021. That'd be a massive sign of like, hey, we might actually have a whole, like some good ground to stand on right now. Excuse me. Okay. Now, as far as Fibonacci support levels and things of that nature, let's get rid of this. I don't want to clutter up the screen too much. Did Fibonacci's actually work on this one? I haven't checked out Ethereum too much here. Let's just, this one didn't work out. What was that? I guess this one's lower. Yeah. It didn't really work out with this one. Let me see if I change this up a little bit. Did it do any tricks? There, and there. There we go. You always got to switch out for the fib levels for some reason on these things. I don't know why. I'm not that smart as far as a trader, but it worked out on that time. Okay, let me see. So we hit a target. We hit more than a target, so we're doing fine there. Let me check out this 4-hour very fast. This one's going to be a little bit uglier, isn't it? I mean, do we want to go here or here? Stopped there, or do we want to go here to this first one that looked like it was a little more important? Resistance, resistance, resistance. It's an ugly one, but I guess it worked. I guess I could have also changed this up to see if it made any differences. Yeah. If we go up here to that low, bring this one over here, will that make a difference? That way, yeah, okay. So we hit the price target there. Let me take this off very fast. And it's still, yeah, okay. All right, so it's been honoring it for the most part here. As we come back down, though, let me go to the daily chart here, Fibonacci retracement. We're not really honoring these pivot points as much as you would like it. Yeah, not on any one of these. Yeah. So I'm not too enthusiastic about the retracement levels here. I'll see if I can find any more data on it for you guys in a little bit. But going over here to the weekly chart, just like Bitcoin, we're getting closer and closer to a death cross here. I hate that I have to keep on getting rid of the charts, but the 20-week moving average looks like it wants to cross down below the 200. I mean, let's give it some time and say sometime early October. That could be a very bad sign as well. But let me see if I can go back over here. Let me turn this on before I forget, though. Coinbase, Ethereum. There we go. Oh, I told him about it. Yeah, okay. We don't have as much of a time frame here, but it's never happened, at least on this chart before. We'll have to see how it behaves. Looks like if we were going to go off of a 200 weekly moving average. I don't know why I can't find another one here. I guess, okay. Last time it happened was way over here, kind of after the weird little bounce. I guess that was a bull market, wasn't it? And then we kind of came down a little bit more. So this one's actually happened before Bitcoin hasn't. So that's interesting to see. I'll have to go back to that one a little bit later. But okay, I'll open it up. If you guys have any questions on any particular coin, a lot of my answers are going to be very similar no matter what coin you talk about, frankly, unless it's maybe like a Luna or something that's kind of like doing well today. You know, my answers are not going to be changing too much based on what you guys are talking about, okay? Or what you guys are asking about. Oh, and one last thing here. Sorry, guys, my bad. Totally forgot about this. I have it on my little sticky note here. We had talked about the dollar index kind of going on in waves, and we had kind of talked about these cycles and how it works out. So if I can find my pointer, go to my brush, we have this cycle here where we come down, then we rip, come down, then we rip, come down, then we rip. We came down kind of violently this time, and it seems like we're ripping really quickly. We haven't even had the rate hike yet, so maybe if we're lucky, we may actually find a way to trickle down just a little bit. And I don't know if we're going to form some type of double top here, but this is a very violent move. So, you know, we're going to have to keep track of this, but every time we come down, we just seem to be going back up with force. Down, up, down, up, down, up. Nice and simple, you know, first grade patterns here. Okay, but keep an eye on it, everybody. This is a day of bad news, everybody. This is just a day of bad news. But okay, if you guys have any questions, let me know. Shoot, members first as always. I'll be looking at this Bitcoin chart here. Here's the 15-minute Bitcoin chart. For now, we can actually have this on the second chart until I see a good question here. Okay, want some more sip of water, then I'll look at your questions. And hey, Bideford, happy to come in. And I was just walking with Loki before this and doing some other stuff. So I knew the market was crashing when I woke up. I did some day trading. I was like, I'm done. I need to go take Loki out for a walk. He's been really mad at me lately for not going outside as much as I normally do. And so I've been trying to cheer him up because he just like, when I'm working at my computer, I have like a blanket usually over my legs because I have air conditioning running like 24/7. So like a blue blanket right here. And I'll kind of spread my legs out. He'll like lay down in the hole of my legs and just pout at me. Like, I'm comfortable, but I want to go outside and have fun and chase the squirrels and chase the coyotes and stuff like that. And play in the water. So today I decided to give him a little bit more time, and I'll be doing it again later on to help him, give him a little bit more exercise. And hey, Mr. Pepin, happy to see you back. Hey, Cracker Valley, happy to see you guys back as well. That was exaggerated. All and nothing has changed from 7 a.m. to now. What do you call it? It's the only thing that's really changed is, and you have to put it into perspective, okay? When I talk to you guys on this channel, I'm pretty blunt and straightforward, and I give my opinions, and I can be wrong, I can be right, but I'm pretty blunt. I'm like, hey, this is what I think. Look at my video from Monday. This is a scale level to me. I just feel like it's not worth to be buying unless you want to find a pattern breakout. If you watch the news like a CNBC or Fox Business or a Bloomberg, I'm just kind of pull them all into ones. They're all kind of different networks, as you guys know. If you see the people that they bring on to their shows, they're very bullish for the most part. They think there's a lot of room to go. They're very, very excited. So they're kind of ahead of where the Federal Reserve is. And you have to understand that to kind of get why we're dropping so much today. Everybody thought inflation had peaked. Everybody thought core inflation would be coming down. Core inflation was double expectations. Double expectations. Nobody was thinking about that. Or even expect. I wasn't even expecting that. I kind of followed the narrative. Okay, maybe we have peaked inflation. Maybe we'll see how this works out. But the market is being faced with a reality that a lot of us kind of already knew, that the economy is not as rosy and pearly as they keep on saying it is. And that's why you're seeing the market price in the fact that now they know for a fact, like we didn't already know already, that we're going to have a 75 basis point rate hike. If we have a 1 point rate hike, I'd be very surprised. Jerome Powell doesn't strike me as the man to have those type of balls, so to speak. He's much more of like, let's follow and see what happens, but let's not get ahead of inflation. Let's just try to manage inflation, not really like, squash it out. But yeah, for the majority of you guys who watch my channel, watch a whole bunch of other channels out there, you guys are not probably as surprised that the market came down off of bad inflation data, or the inflation data was that bad. But it was more of a surprise that the core inflation was so bad. Regular inflation, it wasn't good. It was above expectations. But that core inflation was really, really rough. Excuse me. See, yeah, man, what will happen to Bitcoin? I'm holding my short. I mean, we're most likely going to be coming down a little bit more over the next few days, especially as this railroad strike comes into place. But you should have scale out levels, and you should have a plan ready for whatever trade you have open. Don't rely on me or any other YouTuber to tell you exactly when to sell. I always sell too early because my goal is profits. That's why I just showed you guys this little thing right here. With the way I trade normally, maybe because I have access to larger funds so I can make more money with less time in the market, kind of less exposure, so to speak. But if we go for this Fibonacci extension tool right here, and I guess it's better to go to this one. Normally, I would be scaling out through this process right here, and I might be done between this level and this level. Okay, I'd be normally done out of this zone. For a lot of you guys, you guys have to hold a lot longer than me just by nature, because whereas I might make $5,000 to $10,000 off of a trade like this, which I didn't take, whereas I might make that much money off of a trade, maybe for you guys are making anywhere from $100 to $500, or maybe even up to $1,000 on this trade. So you guys feel more confident about holding on for a longer period of time, running into that next level of resistance, breaking out above the 200 and the 2.618 Fibonacci extension level, and then getting rejected finally up here. Right. So there's a whole bunch of different strategies, but just like how I might scale out too early right here, and it may continue to boom up, as I might make that fault, you guys, but I'm still walking with a profit. You're going to have to decide when you personally want to make a profit. And the good thing that you have going for you right now is you're in the money, so you're making a profit. So you can set your stop loss to whatever you want to be, and no matter what happens, you're going to be walking away with a sizable profit, which is awesome. But you have to have that plan in place. And hey, Pepin, so I go back to the central bankers and Powell. What if the FOMO by chirping is a new tool other than raising interest rates? Makes sense right now. We all okay with the pricing in a 75 rate hike over not 5? I mean, yes. See, you always have to put it in perspective of who they're talking to. The Federal Reserve isn't talking to everyday Americans. They're just talking to the markets, the hedge funds, Wall Street, basically, right? But like, I mean, did we ever really think it wasn't going to be 75? I mean, I guess there was probably a murmur that it might be 50, but inflation, it just didn't feel like inflation was going down. We go off of numbers, but you only get those once a month. Besides that, we're looking at the gas prices. We're looking at food prices. You guys know I kept on telling you guys months ago, I'm stocking up on rice because I know that food prices eventually are going to get really, really expensive. And food prices continue to go up. That's the painful part of all this. We all need food to survive. We're not going to be going over to the dollar menu at McDonald's, if they even have one after inflation, to go get a meal every day. A loaf of bread that I buy, which is not like your normal store brand bread, but like, a loaf of bread that I buy at my local market is like $6 to $7 after tax. Eggs, actually, I don't know how much eggs are. I normally buy those like eggs that has like a happy farmer and this kid on them. I don't know. They're freaking like $7 for a dozen. They're really, really good though. But what do you call it? Food is getting really, really expensive. And where you thought that maybe gas prices, if gas was going down, maybe truckers don't have to pay as much. Maybe there would be more profits involved. So maybe the fees to transport like food by truck would go down. They haven't. And there's kind of a little bit of a food scarcity thing going on right now. Again, going back to the Russia-Ukraine war, like 40% of all the world's wheat is made in or grown in Ukraine. Yeah, we're not getting that anytime soon. We're not going to probably get that till next harvest season if Russia loses the war, which looks like they might, unless they do something really crazy, of course. But the Federal Reserve, it's good that they're being as hawkish, but they still have to be. They have to walk the walk, just not talk the talk. And they've been having a lot of problems as far as the Federal Reserve has been concerned. They're not really the most legitimate institution out there, or trustworthy. I don't know what the word you want to use, but not many people have faith. Credibility, I guess what the media says. Credibility. They have a credibility crisis, and I think they're fixing it. They're fixing it slowly, but they're going in the right direction here. Excuse me. Let's see. And hey, Far From Broke, happy to see you. And hey, Mattis, hope you guys are doing well. And hey, Dilamic, should you buy Bitcoin? It depends on what you're buying Bitcoin for. I'm still dollar cost averaging. I bought a lot of stuff today on dollar cost averages. I was waiting to see if the CPI data was going to be bad or good. And luckily for me, at least for me to get some cheaper prices, it was bad CPI data. I'm not buying Bitcoin right now for some type of reversal for like a multi-daily swing trade, but I did buy some Bitcoin today just for some dollar cost averages that I hope are going to make me some money like 2 to 3 years from now. But I'm only dollar cost averaging this market as of now. Besides, before that, I was just doing some shorts here. That's about it. Once we broke down below that Ganfan level over here, I took a short, held on for a while, and I sold it right here on this old level of support. And that was the trade I did. I probably could have made, I definitely could have made more money. But basically, Loki wanted to go outside to play, and I was trading from my phone. I took the position on my computer, like I sold it from my phone, basically, because I was outside walking. All right, let's see right here. Hey, Legendary Gaming Channel. I did everything wrong. I mean, just put it in your trading journal, learn from your mistake, and you'll be better off for it next time. It happens to everybody, especially when it comes to inflation data. It just gets much, much more difficult to really manage everything. Like, let me see if I can pull this up for you guys very fast. I got video data. Let me go over here to properties, video capture device. Desktop audio. Let's go to the Yeti. All right. And let's go right here. Okay. I think I can find it somewhere. Account. Yeah. Bitcoin gives up for massive strike. You guys probably don't have to listen to this. But yeah, basically, if you guys ever want to learn more, I don't post these every day because I don't have the time anymore. But I will often post videos while I'm talking to you guys about, hey, here's a level of resistance. Here's my thoughts on it. Here's a support level. I'm looking at the 50-day moving average, or here's the resistance level where, like, I don't know. Let me see if I can find it for you guys. Down below this 50-day. This is lower than my actual volume. Let me see. Moving average, if we do over the next few days, that is going to be a big sign for you guys to be very careful and start scaling out of some of your positions. Or if you, so that was the 50-day moving average talk. But basically, you can hear me pretty clearly just say, hey, this is a stop loss I'd be thinking about. This is a scale level I'd be thinking about. And you guys don't have to follow what I say, but it's just kind of a guide to help you out if you kind of ever want to know what I'm thinking, I guess you would say, right? Those are like the 400 people that watch my stuff. All right. Let's go over here very fast. This seconds chart is very choppy. I think we should go over to this one. There we go. That one looks a lot nicer, don't you think? All right, there we are. And hey, day trading, what happens with the merge? I don't think the merge happens for like another couple of days or so. The merge is going to be a long topic. I would literally Google what is the Ethereum merge or YouTube it, and there's going to be a full-fledged video that's going to be much better than I can explain to you in a few seconds. Let's see. And hey, KTX Lee, happy to see you back. I'm happy I'm live as well. And hey, Doshi, MSNBC just announced this is a record single-day loss on the S&P 500 since 2008. I mean, it makes sense. Like here, we have the SPY open right here. Let's just open up the middle one. Wait, record day loss? Record single day loss the S&P 500 since 2008. Geez, yeah. I mean, we're not looking too good right now. That's the main point. I mean, like here, let me zoom out of all this stuff. Let's get rid of all these lines that don't even make sense at this point. I think when we're looking at the S&P and the Nasdaq respectively, if you use like the $400 SPY or like the S&PX, that goes into the thousands, it's important to kind of see historically where are we at. We're at a really big peak. We're coming down quite a bit. We haven't come down this much since COVID, and that was a really big ricochet. We're not going to have a COVID moment this time. We're kind of in, it looks like more of this cycle, not so much the 2008 financial cycle that kind of happened really fast. It looks more like just a nasty grind here. But we'll see how it works out, guys. It's just not looking pretty at this point in time, right? Not looking pretty at this point in time. What we have the 20-week coming down, the 50-week coming down. That was a bad sign there. We're still very far away from the 20 and the 50 coming down below the 200 weekly moving average. That's kind of a good news for us. Again, the concern is more with the Nasdaq, I would say, because tech is really driving a lot of stuff. And you look at this monthly chart here. Oh man, it looks like we want to do a bounce and then crash over September, the end of this month, and going into October, right? Let's just hope when we come down, if we do come down, we manage to find a nice support level down here and then just bounce. We want to bounce, and we want to bounce hard after all said and done. We want to manage to break out above the 20-month moving average. One of the big signs that really freaked me out as far as Bitcoin was concerned all the way back a few weeks ago, a few months ago now, was the fact that, let me see if I can just get rid of all this. We don't need it. Coming out of January, where everybody was like, oh no, we're going to go back up to all-time highs. The moment we broke down below this, I wrote a post out for you guys saying, hey, or did a video, hey, watch out for the wick. It's going to trap a lot of people because we're going to be coming down after the 20-week moving average, 20-month moving average, because every time we cross down below it, again, I discount COVID because COVID was just stupid for charts. Once you break down below it, according to history here, it's just not a good time for the markets. If we can get back above that, as far as Bitcoin's concerned, that'd be awesome. But it just doesn't seem like it's something to be as likely happening anytime soon because the economy is getting worse, not better. There's talks of more layoffs happening now. I can just show you guys this right here. Goldman Sachs to kick off Wall Street layoff season with hundreds of job cuts, right? This month. Yeesh. Right? What the tech layoffs mean for the companies. Patreon lays off 17% of staff, affecting 80 employees. Only 80. That's fine. I mean, not fine, but it's only a small amount of people. But it's going to start adding up because tech usually leads manufacturing as far as layoffs. When the tech people start going, those people are the people that buy all the stuff that's manufactured. When the manufacturers get laid off, then the whole world starts to crumble because then like all the people, all the restaurants, the entertainment, what's the industry? Entertainment industries, whatever, like the movie theaters and stuff like that, restaurants, they start to suffer. So we're at the beginning stages of this spiraling downturn, so to speak. But here, let me see if I can find any more news. Warner Bros. Discovery faces more rounds of layoffs. Let's see. A white collar recession. That's an interesting way to put it. Legal hiring is cooling off. You think lawyers always have jobs? Apparently. Cautious job cuts. That's good for JP Morgan. So yeah. So this 10 hours ago, around 60 top companies across sectors announced layoffs. So this is only 5,500 employees. So, this is Tencent. This is one company, 5,500 employees. Ooh. All right. Well, the economy is just not that good. But we'll see, guys. We'll see. I believe out there in the crypto world or in the financial world, there's going to be a lot of different opinions. You guys know I'm bearish, and I've kind of been talking about the last few months that I think we're going to eventually hit new yearly lows. I really hope I'm wrong about that. And, there's a lot of other YouTubers saying we're not going to break down below the 17,600 level we experienced back in June, that we're going to find a way to kind of bounce back up. I'm hoping that those YouTubers are right and I'm wrong. It's just kind of like what we're seeing is kind of a little bit of different based on kind of our histories as traders. Excuse me. And hey, Pepin, since the dollar index isn't traded, isn't its algos info kind of like from the stock indices, like markets dumped that API report and actually see the DXA spike? In a way, the dollar index, there is money flowing around, right? So like the British government owns US dollars. Corporations in England own US dollars. Corporations in France own US dollars. They have to buy those so they can do transactions, right? Most companies in America, when they work outside of America, they do transactions in the foreign, like in American dollars. It's rare that you're going to see Americans pay for European goods in euros. We pay for our goods in dollars, and they hold those dollars, which they can then spend back in America, right? That's what makes us so much powerful, because we have the dollar. It's kind of like the supreme thing right now. But going over here to, oops, didn't mean to push that button. Let's just go to the watch list, I guess. You'll see a bunch of stuff here. Like here's the euro. The euro is still under $1, right? We're still going down. Lower lows, lower highs. We've had lower lows for the last 1, 2, 3 month. We've had lower lows for the last month, and we've had lower highs for the last 1, 2, 3, 4, 5, 6, 7. For the last 7 months. And guess what? We just had a death cross last month from the 20-month moving average crossing below the 50. Last time that happened, we came down even more, although that was towards the end of the cycle, which was kind of nice. But over here, happened right here. Oh, geez, that was a really bad one. Let's hope it's not going to get that bad. But yeah, I mean, like here, it happened pretty fast, right? So we may find a bottom out sometime actually in Q4, as long as the economy doesn't continue to get worse. That's the big if here. But I mean, the last time the euro was this cheap was in 2002, not 2008, not 2016, 2002. I was 2002. I was 8 years old. Yeah. So, this is going to be interesting. The pound is starting to lose even more value. You guys can see right here, if I can kind of show this to you guys. Magnet it up. I know it's going to look very weird, but we broke through that level of support. We broke through it. That's not a good sign. That means there's still more downside to come here. And if there's more downside for the pound against the dollar or the euro against the dollar, that means the dollar's value is going to go up, which means that Bitcoin is going to be coming down. The markets are going to be coming down. People are going to be more interested in holding cash or being in bonds or high dividend stocks in the healthcare sector. You know, when stuff like that happens, it's not a good time to be holding assets. It's what you might call risk off assets, right? People don't want to take the risk. They just want to sit with the money and wait for the carnage to blow by. Usually the people that are holding stocks in this time are retirement accounts, you know, people that just like, they don't want to mess with the taxes of moving the money around too much. But you know, at this point in time, it kind of makes sense to move your money around a little bit. But that's only if you like actually manage it, right? If you don't manage your money, be careful about messing with your 401k. It's something I would probably highly you should not be doing that if you guys don't know what you're doing. And then one last thing here is, this is the SPX, a little bit different, a little bit nicer. If you ask me, you can see the months, it goes all the way back down like the 1800s, even though it's kind of choppy around these parts. We're still this is a monthly chart, like I said. We are still very far apart between the 20-month moving average crossing below the 50. Usually a bad sign, usually a bad sign. If we go off of this one, that's not happening until like 2024 or something crazy like that. So we're still in a good spot. See how we're kind of just arcing over? If by the time that would happen, no. Here, hold on a second, guys. If I was to draw this out, and let's just kind of go off of this. Oh, let me get the man off. If we go off of this general trend, that kind of makes sense. We're kind of gradually off. But in order for this to kind of work, I mean, even if we say it works out well, that's still going to happen in 2024. So that might not happen anytime soon unless we hit some type of really, really bad market conditions. Let's hope that doesn't happen, though. Okay. Excuse me. Let's see. And hey, Christine, food prices have come back down since their previous peak for now. Let me see if I can find some data on that. Food prices. I guess CNN will do. So food costs spiked 11.4%. Food costs spiked 11.4% over the past year, the largest annual increase since May 1979, according to data Tuesday released by the Bureau of Labor Statistics. So egg prices have soared 40%, flour up 23%. Milk is up 17, and beans jumped up 16.2. You guys know beans are getting more expensive? I did not know this at all. Let's see. Margarine's up, hot dog prices are up, turkey's up. Oh my gosh, Thanksgiving. When everybody sees the Thanksgiving bills this year, this is going to be insane. But yeah, so you do see food prices going up. I guess it depends on where you guys are at. I haven't seen any relief as far as food prices close to me, but I'm hoping some of you guys have. That's a really good sign that maybe things are going to get a little bit better. And hey, Zachar, I thought we were momentarily stabilizing, but I didn't realize they were estimating that low of an inflation increase. The market still has this rosy outlook for their economy. They think that the American economy is going to hold up fairly well, and then inflation is going to come down very fast. They think inflation is going to go like a V. So like, let me see this little tool I have, but like just up, down really fast. Well, it looks like right now we're up, stagflation, and then we don't know if we're going to be going down or going higher. If we have a railroad worker strike, guys, and it lasts longer than a week, that whole disruption will skyrocket inflation for next month, which will give this even a worse expectation, which will cause the market to come down even more, leading to some really crazy chaos. We really don't want that strike, guys. We really don't want that strike. But I mean, I'm kind of in there. I'm rooting for the workers to get what they want, but this strike is just going to be like brutal. Let's see. And hey, Pepin, Mike, you're awesome. Thanks for the answer, and I agree. We think it's 75. I know, but I have a little hope. But 75 was already priced in. No, they were pricing in 50. They were pricing in a rosy outlook. So what they were pricing in was good CPI data, like so coming down fast, and that might give more leeway for the Federal Reserve to do 50. So they were trying to think 2 steps ahead of reality, and so they got punished for that a little bit. And you saw the market react pretty violently off of that news. But yeah, the market's not supposed to be illogical. Wall Street's not supposed to be perfectly logical. There are 3 movies I think all of you guys should watch just to kind of get a feel of how money moves in the United States. One of the movies is called Margin Call. It's really good. It has Jeremy Irons, Kevin Spacey, Spock from the new Star Trek series. I forget his name, but they're really good actors. Really, really good actors. Another one that you guys should consider is Too Big to Fail, and the other one is The Big Short. They're all fantastic movies, but they all kind of show how whacked out our financial system is. Sure, did we add some more guardrails after the 2008 financial crisis? Yeah, but did we really do enough to stop them from being like, aggressive risk takers? No, right? And we kind of like that aggressive risk side of Wall Street, to be honest, because that keeps the market just going up and up and up and up. If any of you guys have had a 401k over the past decade, whether it be under, I guess stuff was stagnant under Obama, but once towards the end of Obama's presidency, Trump's presidency really took off, right? And then I guess not so much Biden, but at least through Obama and Trump, your 401k was going pretty well. Now we got some different policies in effect, kind of weird ones, I guess you could say. But that has had a little bit of a drop off. Plus Russia's invasion, plus Europe's choice to kind of be energy dependent on Russia. All of these factors have kind of added up to just being a bad situation, and we're not really facing the challenge in the proper way, which is going to have effects that kind of are the ones we're dealing with now, obviously. Let's see. And hey, Time, happy to see you back. And hey, Alex, happy to see you back as well. Thanks for watching, guys. I appreciate it. Thoughts on Doge for the short term? Yeah, Doge for the short term. Watch out for a potential breakdown here over the next few days. What's the best way to do this? Just like with a lot of other coins here, this is the monthly chart. We're kind of getting primed for a move down, probably closer to like 5 cents or so. So just be careful with it. Going over here to the daily charts, though, let's kind of talk about it a little bit more. Oh, there was a level of resistance there. I don't know what it is. I'll delete it. So, Dogecoin's broken down. It's kind of been on this little bit of a downtrend here. I wouldn't say it's anything crazy. It's just the whole market's been in kind of a downtrend lately. What you're looking at in the short term here is going to be this basic support level around 0.0575. If we break down below that and close down below it on the daily chart, and specifically, that's going to be a huge red flag, a huge sell signal. So just be careful with it. There's little chance of us having a golden cross anytime soon unless Dogecoin really takes off. It doesn't really look like that's going to happen. After the last death cross Dogecoin had, it was all the way back over here. Let a pretty nasty drop. I'm not saying we're going to have a drop that bad. That was a lot of Bitcoin freaking going crazy, right? But if we go over here to the 4-hour chart, I think it's going to be pretty interesting to see if we're going to be able to break out above the 200 moving average on the 4-hour chart, or if we're going to be able to get rejected by it and actually come down below the 0.057 level that we just talked about right here. And you can see we actually did already break down below it, but we didn't close down below it on the daily, which is a good sign. But the only reason I'd be buying Dogecoin here, I think, is if I use the stop loss that we just talked about, or if we manage to get back above the 200 here, then I might buy some for some, maybe a small short-term trade. But Dogecoin, just like a bunch of other coins are now, looks kind of bearish and looks like it may want to take this next step down, where we might be heading back closer to 5 cents or a nickel here, right? But until we break down and close down below 0.05754 or 0.05754, yeah, you could buy up at these levels if you want to. You can do some dollar cost averaging. I'd be very, very careful. This monthly chart, like I posted on Twitter a few days ago, or maybe a few weeks ago now, a lot of these charts just don't look too good on the monthly. It looks like we're just facing a lot of trouble, and looks like at any moment, remember guys, I was really hopeful at the beginning of this month that we would keep the cycle of higher lows, higher lows, higher lows, have a higher low here, and then we can start to, have a reversal and boom, we're off to the races. Well, we didn't really keep those higher lows, and we also had higher highs. We didn't really keep that. So now we're kind of facing the struggle that we're currently in. But I would say be careful of Dogecoin. There's a chance it could come back down to 5 cents over the next, let's say, month and a half. And the short term here, just really watch that support level. If Bitcoin decides to go down more tomorrow, that could cause a little bit of a chain reaction, causing a lot of altcoins to break down below those major support levels. And hey, Zachary, I know some grocery stores that still haven't increased their prices yet, but plan on it. I'm assuming these numbers won't be getting much better in the short term. Yeah, I mean, I guess it does also depend on where you guys are shopping. So like some of the places I shop are Whole Foods. Whole Foods prices, yeah, a place that I like to get meat. Oh. Okay, cool. Sorry, my Streamlabs software reset on me for a second, and I noticed the stream kind of had the little squiggly thing, so I think we're good, but that kind of scared me for a second. And the last place I go, I don't even know what it's called. Not McMinimans, that's a place downtown Tacoma. Not McCormick's. Hold on a second here, guys. Let me see if I can find it. It's that good of a place, though. It really is the best place in the world. I love their food. How do I go over here? Alpine, middle of nowhere land. Meat market. Oh, Stewart's. Yeah, there we go. It's this place called Stewart's. It's like pretty far away from where I live, but it's this little shop in like no man's land. There's like a little town right here, Yelm. It's all kind of, farmland, forest, beautiful, beautiful area. But basically, this place, do they even have a website? I don't even know. Yeah, there you go. They sell like very high quality meat, and when I want to get some meat, I love it. But their prices have been going up, but not as much as the inside stores. I mean, like here, I get a meat pack every now and again. Look at these meat packs: 30-pound steak, 50-pound family steak. Doing barbecues, I go there and I get like the 40-pound variety pack. Is you got like cube steak, pork steaks, pork, a lot of pork. When you have a party, you throw pork. Don't pay for beef for other people unless you're really going out. That's where you can get the chuck steaks and stuff. But who wants to pay for all that? But what do you call them? They have a whole bunch of cool stuff. Every now and again at Loki's food here. Chicken necks, chicken backs, turkey necks. Oh, they're so good. But they even have crazy stuff like this. Pheasant, quail, geese, duck, alligator tail, boneless, llama, kangaroo, wild boar. You guys have never tried this stuff, and maybe some of you guys have, but the fact that those prices haven't gone sky high, it really warms my heart. But like if you're in a big chain store, yeah, you've seen the prices go up quite a bit, at least close to me. And hey, R Lake, happy to see you back, my man. I'm doing pretty well. I got a little bit of a cough coming after COVID here. Looks like my throat's still not 100% better. But it's been an okay dab. It's been kind of relaxing. I know the market's been crashing here, but I mean, you always know inflation days are just going to be volatile, and today was no exception. I was just kind of hoping inflation might have peaked in reality set in and just said, nope, we're not peaking anytime soon. So that kind of sucks. Maybe we have peaked, but we're not going down fast like people might have thought, I guess you would say, right? I keep on watching CNBC all the time, Fox Business. They have all these experts on, and I'm like, I trust these guys. No, I don't trust them after all. And hey, Christine, it would make a lot of sense that beans have gone up because there are people who literally can't afford much meat now. Oh, I didn't think about that. Gosh, these are, I don't know. When I was a kid, we used to have beans a lot when we were poor. When I was a kid, I tried to grab a can of beans to eat while my mom was out. And I dropped the can of beans on my small toe and I broke my small toe. Oh God, I was traumatized from that. But I was like literally like 5 years old, and I was just picking up a massive can of beans, just dropped it, smacked up my toe. But I do love beans. They're really, really good. I mean, like I literally have like tons of dry beans. I got pinto beans, black beans, all in these little nice little sealed containers. Amazing. But yeah, beans are getting more expensive. I personally, I mean, you guys know I was telling you guys about food is going to get more expensive like months ago. One of the cool things about working in this kind of environment as like a full-time trader, you really do understand the good sides of the economy and the bad. You can kind of see where the projections are taking us. But that's why I told you guys a few months ago, like, hey, I'm stocking up on rice and lots of rice, and my rice is still doing perfectly fine right now. It's still, you got to keep it in a good environment. But the funny thing is, like, rice is like gone up like 25% at the store where I buy it at. It's gone up like crazy, and I'm like, thank you so much for me just buying a whole bunch of rice up and putting it in the garage. Let's see. And awake hip hop and short on Lunacy. You want to open a short, or you are taking a short? I mean, right now it seems to be doing fine as far as it had a little bit of a big boost. But be careful with that sucker. It's going to be very, very volatile. If you buy Luna, the worst you can do is hit zero. But if you short Luna, the worst you could lose is like tens of thousands or percent. As long as, well, it depends on if they have a safety level for you. So just be careful with it. Oh, I think Loki wants to say hi, everybody here. Hold on. Hey, Loki. Oh, where you at? Loki. Hello. Hello. Ow, dude, your nail is scratching me. Ow. I just trimmed his nails yesterday, too, and they're still sharp because he likes to sharpen them outside. Here, you want a treat? Here. And then we'll go back to talking about any coins you guys want to talk. Here we go. Come here. Come here. Say hi. Yep. I just gave him a little de-shedding yesterday. He was covered in hair. Oh, I guess he still is, right? Oh, thank you. Oh, wow. She just wanted a treat, and he was off. Okay. Good boy. Yeah, he's just waiting for another treat right now. Okay, let's go back to Bitcoin here. Let's see. You can buy goat, saw it on that menu. You can buy anything you want. I don't mind goat. I mean, I'm not too big of a fan of lamb. I'm going to a place for my birthday called Asada, which is downtown Tacoma. And it's a really, really good place. They have like lamb and sea bass and everything like that. Really good food. But I tried the lamb once, and I've tried lamb a few different places. It's like $70 normally when you go out. So it's like, it's what you might call good quality lamb, I guess. But I've just never liked the texture or the taste of lamb. It always tastes funny, and it always feels funny. The texture of it feels like it's almost like a fishy texture, but like a hard fishy texture. Whereas when I go to that restaurant, I get sea bass because sea bass is just, I don't know what about sea bass it is, but sea bass is just amazing with a little glaze, a little bit of rice. Yeah, they got it good. And brown rice, right? It's better for you. Yeah, I got brown and white rice. So I got like 4 bags of white rice, and then I got 3 bags of, I don't know, those 3 bags. I don't know. I got quite a bit of brown rice. The brown rice is a little bit different because it's brown sweet rice. So it's not the long grain rice. It's like these little teeny, like little round things. But and my rice cooker is kind of weird, so you can't cook 1 cup of rice at a time like I would normally do it. You have to cook like 4 cups of rice, 3 cups of rice, which is kind of annoying because I don't really need that much rice at once. So what I do is I just like stock it up after I'm done cooking it, and I'll eat that rice throughout the entire week just to make sure it doesn't go to waste. Let's see. And hey, Jay, happy to see you back, my man. Good morning to you. I just woke up here in Australia, and I thought the market will go green today. What happened? Worse than expected inflation data. Inflation was projected to be going down a little bit. It's kind of going up a little bit, so it's not looking too hot right here. So people are really freaking out about what the Federal Reserve is going to do. They're also freaking out about has inflation really peaked, or are we just going to take a little bit longer to go down? That's the real big thing here. So, let me see if I can find this right here. Oh, yeah, Stewart's. Let's see if this will be good. Can I? There we go. Yeah. Okay. Cool. There we go. Dude, Zoom, get out of the way. There you go. Okay. It's gonna be good. I don't know if that's gonna be okay. Okay. Never mind. It might not be. Okay, that Zoom is gonna annoy me. Except for CPI. No, okay. Maybe this will work out. Okay, never mind. I'm not going to even get through this. Okay, I don't understand bureaucracy websites. But basically, inflation was down from last month, but it wasn't down as much as the experts were pricing everything in at. And so when the data was worse than expected, yet still better than last month, you saw the market not take it very well. And what this signaled here, because, and one other caveat here, overall inflation went down, but food is going up. You're seeing other indicators going up and getting worse, which is going to be a big factor later on. So there's a chance that we haven't reached peak inflation. We haven't reached peak inflation yet. But okay, what this kind of all means is now it's a certainty that the Federal Reserve is going to raise the interest rate hike by about 0.75 basis points, 75 basis points. And, you know, I think the market might have been pricing in 50, being a little bit more dovish than I think the reality should, you know, what they should have been doing, you know. And so the market wasn't prepared for this, and you're just seeing the market just crash because of it. Excuse me, finishing off today, if we just go over to CNBC.com here. So the Dow is down about 1,200 points, almost 1,300 points. S&P closed about 177 points down, and the Nasdaq closed about 632 points down. Now, the Dow closed down about 4%, S&P over 4.5%, and the Nasdaq closed 5% today, and the Russell 2K closed about 4% down today. Only thing up was the volatility index, right? And I hope my signal is not messing up here. I keep on seeing this screen kind of do a little twirly thing. I'll have to figure that out. And this is breaking news, guys, if you guys care. Ken Starr, prosecutor in Clinton Whitewater probe, dies at 76. Let's see. Oh, so it's breaking news. Check back. They don't have any. Yeah, it's just news, I guess. They're loving more. Yeah. Center cut smoked bones. Sorry. Loki loves everything about that place. He's not allowed inside, obviously, but yeah, I let him sit in the car and he just smells up a smokehouse. And he's like, oh, this is heaven. There we go. And it looks like Bitcoin may be trying to make a higher low here pretty soon, or we're just going to be taking another tumble. Since the market's closed, we should be able to calm down a little bit. I mean, it's rare that Bitcoin loses more than a few percent every day, and we're already down about 9.5%, with about 4 hours left, almost like 3.5 hours left. I'm hoping we can find some type of bottom here just so we can start to consolidate a little bit more and try to get out of this little bit of a pickle. Let's see. And thanks to AWK Pops. I appreciate it. And hey, Pepin, I'm long Ethereum at 1554 liquidation price. Your thoughts? When did you buy, though? Just go over here very fast. Okay. You're long Ethereum at 1500 with the liquidation price. Wait, what? So your liquidation price is $1,500. I would assume somewhere down here. When did you long? I need more information. Around 3 hours ago. 1 hour ago. 3 hours ago. Okay. From here. You came close to liquidation. It looks like 1,500 liquidation prices down here. Okay. Okay. So what I'd be looking for right now, as you can just see, we actually managed to break out of this Fibonacci extension level at the 0.786 level here. You might be looking to see if we can get back above the 1637 level if you're lucky. That's like another about another like 0.66% above where we are now. That's not really like too hard to do, right? This is just a 15-minute chart. What you might be hoping for is that if somehow we're able to make a little bit of a reversal going into later on tonight, because everything's kind of oversold at this point in time, you might be able to get Bitcoin back up here towards 1670. And that's where I might like to scale out of. I would just say be cautious as we kind of look for this support level where we can start making a reversal. You're going to start to see a lot of moving averages here over the next few hours kind of come screaming down. So you have the 50 on the 15. The hourly chart is what I'm going to be looking for. You're going to want to see if we can start breaking above some of these moving averages as they creep down. The 2 and the 4, it's going to be a really long time before we actually have to deal with those, if you ask me. But 15, 30, 1 hour, maybe 2 hour, and 2 hour, not too much. Those are going to be those big levels of resistance that you want to be very, very careful of. But if you look at the 1 hour chart, as far as Ethereum is concerned, you do have what? The heck? There you go. Bottom, neckline at the 1631 level. If you're able to break above that, then you can get to that price level we just talked about a few seconds ago. So I think it's okay if you're holding it right now. I would move that stop loss up just a little bit in case things really get nasty. But I don't know your leverages, so that stop loss may be actually perfectly fine for you. But yeah, I don't think it's a bad thing at this point, since you're just buying a big drop off in the market. Just be mindful of some of those moving averages there. And just because it fails to break out above them on the first try doesn't mean it can't work on the second or third tries. Anyways, Jay, happy to help you out. And hey, Crypto Beehive, why is chicken leg or turkey leg, but it's leg of lamb? Leg of lamb is fancier. Leg of the lamb. And hey, Ken, yeah, I don't know why people still don't get the messages here. There's only like 60 people watching. Thank you, 60 people that are watching. But YouTube is trying to slam down on my crypto channel a little bit right now, and I'm just gonna I don't really care too much. I mean, the people that want to watch my content will care, and I guess I care because of that. But there's no fight I can do with YouTube at this point. The sky is not falling, but it was a very, very bad day for news, and it was kind of crazy too because today, now I didn't watch the speech, but I got the alerts on YouTube. Joe Biden gave a big speech about the Inflation Reduction Act on the day where inflation was much worse than expected, right? So there was a lot of media coverage of that going on here. But basically, Ken, what I just told Jay here is that inflation was down from month over month, but it wasn't down as much as people thought. People thought inflation is going to start like really tumbling down here very, very quickly. It's not. And then on top of that, core inflation without food and energy, that's starting to tick back up. And so there's a really big question now. Is inflation, have we reached peak inflation, or are we going to get much worse as the next few months go on? And I'm going to say there's a chance we could actually have higher inflation leading into next month and the month after that. And then the big thing, you already know this, but the big caveat here to everything going around, the one big thing that people are just now starting to talk about after we've been talking about this since like July, is this sorry guys, you guys know I have trouble with my R's. Railroad strike is like about to start if they can't get a deal before Friday. Friday is the deadline day. So if they don't get a deal by Friday, probably starting Saturday or Monday, they might vote on Saturday, Sunday, no working, Monday, no working, whatever. But we're going to have a formal strike, and that's going to cripple the entire infrastructure of America practically, because all this freight, it has nowhere to go. So, if we kind of look at let me just say it. Let me just type map US. This work. There you go. Okay. All right. We got a nice little map of the United States right here. Zoom in. You got the good old 48. Okay. All across the West Coast, we have tons of ports, and we get a lot of stuff from our friends over here in China. Okay. Look at all those roads. All that stuff is going through a few ports, right? Well, for the most part, right? LA ports, San Francisco ports, Seattle ports. Portland doesn't have a port. It's not actually by the water. It's a river. It's not the same thing. But basically, a few trains take all these goods all across the United States. Trains take a lot of the oil from up here in Dakotas and Texas all across the United States, plus pipelines and stuff like that. But if there's no trains running, all of that stops. All the movement going from here to drop off all the goods from China stops. All the food being produced, all the oil, all the raw materials, minerals from like the interior states, all the good stuff they make, that stops going over to the coastlines. All that trade kind of stops here. And a way to put this into perspective is that if these guys go on strike, in order to replace all of that freight, they would need 456,000 trucks. 456,000 trucks. We don't really have that many trucks to help out in that situation, which means the ports would get backed up again. Truckers would have to choose which routes they take. They get more power. That's awesome for them. They already have a good power right now, but they get more. So it's going to lead to some general chaos. And, trains don't just deliver like iPhones or plane parts or cars. They move hazardous materials, big waste, lots of waste. So if we really do have a strike, it's just not going to be good. Not going to be good at all. And hey, David, how about the freight from Mexico? You missed that? Oh, freight from Canada to Mexico. Yeah. I mean, I made a video about this and I talk about it. I specifically bring up the avocados from Mexico and I'd bring up the maple syrup from Canada. But what do you call it? It's excuse me, guys. We're going to be screwed if there's a strike, guys. It's just going to be a disaster for the economy. We're not going to be looking too good here. And hey, Nico, happy to see you. What's right here? And they can total 2. Is this a good chart to use for the overall crypto market? What's total 2? I don't use charts that kind of bring in a whole bunch of other stuff. I just use the charts for whatever I'm trading usually. Crypto total market cap excluding Bitcoin. I mean, this chart kind of follows Bitcoin quite a bit here, so I would personally just be using Bitcoin. But if you want to use this, you can actually see, unlike where Bitcoin hasn't broken down, this chart actually we did break down for a little bit, didn't we? Yeah, we temporarily broke down. Looks like we were able to hold though. That's good. Yeah, 4-hour chart we held. That's good enough, I guess. But we do have to worry about this trend line coming pretty soon if you want to pay attention to that. That's kind of around here on this $559 billion market cap. For now, though, I mean, watch out for a reversal, guys. We could reverse, pattern out, and then we could either break down or start churning back up again if the news is okay. Friday is the big news with the deadline for the railroad strike, of course. But for the short term, guys, I'd be much more inclined. Boom. Yeah, I'd be much more inclined to think we're going to have a short-term reversal here. Let's see. You could use it for the overall market if you want to, but typically I'm more than happy just to use Bitcoin's chart and the Nasdaq's chart. And then, of course, SPY and the Dow, but the Nasdaq is what I really look at as far as Bitcoin's prices. But yeah, you could use it if you wanted to. I think it has a usefulness. But I think you're going to see parallels between that and Bitcoin. Maybe even, I think that coin specifically and probably Ethereum is what's going to be the big parallels there. Let's see. Hey, Biden, I appreciate the love, my man. Let's see. And hey, David, like silver, lithium. Yeah, exactly. I mean, I'm looking at buying another ring here pretty soon to treat myself for my birthday coming up at the end of the month. And I'm like, silver is getting more expensive. Gold's more expensive. Oh my gosh, gold is expensive. But you guys know I have this silver ring on my hand. I kind of want one more, maybe 2 more. I like silver better than gold on my fingers personally, but gold is nice too. Maybe I'll get gold afterwards in case I ever feel like I'm in a gold mood. But gold rings are like 2,000, 3,000 bucks. I like gold, but do I like it that much? No. Do I like it? I have a gold watch. That's kind of nice, but sure, yeah, that wasn't cheap. Anyway, Zachary, I work with oils for cars, so it'll be interesting to see how bad the strike will be for me. We already have product procurement issues. It'll most likely get worse. Hopefully your goods come by truck and not rail. You know, the whole journey, it's all by truckers and not trains. If any part has to do with trains, it's going to be a pain. Or if you get any of your goods from China, that's going to be the pain, because if the goods aren't being moved out of the port to the to the interior of the country, or wherever they have to go, you're going to notice that the ports are going to get backed up. You guys remember all those pictures of all the ships backed up on the LA harbor or the port? It's going to happen all over again. And I just don't think anybody wants to see that. But, you know, railroad industry is being picky. Let's see. And hey, Nico, you FOMO last night into crypto. Just make sure if you FOMO into crypto, any crypto at any moment in time, you have to have a stop loss there to protect yourself. And, you know, make sure you kind of look at the scale out levels versus the buy-in levels. I put out a video a couple days ago talking about how I thought it was more of a scale out level than a buy-in level. Or if you do want to buy in during a FOMO moment, the best thing you can do if you want to buy while FOMOing in is to buy a pattern breakout. And then on that pattern breakout, you can go whoosh, look at that, making some money. And then you move for a tighter stop loss off of the breakout. So no matter what happens, you're looking okay. And then on the top of that, you want to be looking for a breakout or confirmation on the 4-hour charts, and not so much on the 1-hour charts or the 15-minute charts or the 30-minute charts. Because a lot of times if you have a breakout on those smaller time frames, what it looks like here is like it's like a there's a magnet. So you have, like, let's just say a typical breakout like this, right? So you're consolidating, boom, ba-doom, ba-doom. You got your lines drawn out, right? And then right here, sometimes you break out, come back down, and then you soar. But there's always this little bit of a fake out moment right there, which really trips up a lot of new investors. And this one's always scary because sometimes it really does end up being a fake out or a fake breakout and ends up coming back down. So, you know, that's the moment of truth for a lot of people. But if you wait for the 4-hour candle to break out, you might not be able to buy right here and take the most of the profit because you're adding onto that risk, right? But on the 4-hour chart, maybe you end up buying right there and you're able to capture all that profit. But, you know, maybe if you're right here, you had the opportunity to make all of that profit, right? It can be tricky at times. Trust me, I know. But write it in your trading journal, figure out what you did wrong, and then make sure you don't repeat the same mistake again. And hey, Babyfish, happy to see you back. Enjoying a nice shorting day, I bet. I tend to buy gold when I go to Colombia. I buy the 18K jewelry from the markets when I go visit family and pay the gram of gold at the time of purchase. Oh, that's actually pretty cool right there. I never thought about that. I mean, I guess because I get designer jewelry, it's kind of like really overpriced. One of the rings I'm looking at here, how do I do this? I'm thinking of getting, I don't even know what it is. This ring right here, men's rings. If I can find it. I really want this one, but I really don't want to pay that much money for gold that you can't really see all the time. And I hear it gets scuffed up pretty easily. This white gold one, though, I kind of want to get that one. This wave one, I kind of want to get that one too. If I was to get one today, it'd probably be this one because it's like more than half the price of that one, cheaper than that one. But there's one I want to get here somewhere. If I can find it. Bloopity bloopity blue. Not the chevron, forged, no. Might not be able to find it here. Is there a search bar? Oh, yeah, Pave. Oh, maybe not. I don't know. Pave ring. Why is it showing all the expensive rings? It's like it wants me to buy something really classy and expensive, and I'm like, no. Okay, maybe I can't find it here. I don't know. price. Well, of course, it's all of them are that expensive. Material, sterling silver, apply. Oh, this one right here. There we go. This one. I was thinking of buying this ring right here. It's like $1,300, a lot easier. But kind of want that band, that wavy ring too. So who knows? That wavy ring's cheaper though. So yeah. Let's see. And hey, Big Fish, I'm doing well. A little bit tired. I still got a cough from COVID over here. Been spending a lot of time with Loki outside. He's been one of my neighbors got a new Aussie puppy, so Loki's been saying hi to him a lot, getting him used to other dogs and socializing. And Loki's been having fun going outside. Like, you can't see him, but he's just like standing next to me right now, like pouting because he wants to go back outside. Come here. Yeah. So, like, all this guy wants to do now is go outside. But as soon as I put the camera on him, he disappears. Oh no, he just hides over here. See? Hello. Oh, now he's underneath the desk. Yeah, so he wants to go have tons of fun here. And hey, Christine, I don't want to jinx it, but my day trade with ratio is about 83% win for the past week. That is awesome. Good job on the profits right there. According to my records, it's quite the improvement. That's all you want to see on that trading journal. You want to see yourself getting better, because when you first set up that trading journal, you're going to see a lot of nasty stuff. And again, you know, my goal is I hope you guys don't lose all of your initial setup, like your initial buying power, right? Because, you know, I don't know any traders. Maybe I do. I don't know. But like, I find it's very rare for a trader to go full-time trading without losing quite a bit of money up front. And I doubt you guys have, a source of unlimited money or a large savings account that you guys want to draw out. You guys aren't going to be drawing out your 401k to trade and stuff like that. So I want you guys to just nice and slowly work your way through it, right? And I think you guys will be just fine. But this is a long process, but I'm happy you're seeing improvement. Improvement is what you guys are always looking for here. And hey, Sergey, hope I'm pronouncing your name right there. I think I can do the ring for you cheaper. What do you call? Perhaps. I don't know. I'm much more of a bougie ring type of guy. I don't know why. Maybe because I like the brand names of it. But I got the John Hardy ring right here. You guys can barely see it. But I like the way it looks in my videos. I like it a lot. So I think by adding maybe one more ring on my other hand, it'll finish off the look. Or maybe I'll get one more ring for this hand and one more ring for this hand. So maybe I'll get the more expensive pave diamond ring over here on my middle finger, and then I'll get the other wave ring over here on my index finger right here. So, excuse me. It's gonna be fun to look for all these rings though. Shopping is like half the fun when it comes to, style, I guess. And I don't really have much style, which just makes this all much more fun. Let's see. And hey, big fish, I don't think the pain is over. Dollar index is still grinding up. Yeah, I mean, all we've been doing as far as that dollar index is going up, cooling off, going up more, cooling off, going up more, cooling off. And we're still in this like cool off period, right? Oh man, we're getting shorted down here. Somebody really doesn't want us to keep on to find a nice support level here. Well, I guess our support level right now is kind of closer to what, 19,527, 19,600 here or so. That kind of makes more sense when you think about it. And hey, Big Fish, just like your son wants to go outside 24/7, like he's literally pouting while laying down my legs right now. Yeah, he looks so miserable. And I'm like, dude, we'll go outside. Like this guy spends 2 hours every day outside playing in water. I have like 1,000 pictures on my phone of him yesterday. I took of him like playing in a mud puddle. So he's spoiled, but I spoil him, so it's my fault. But I hope he has some fun there. There we go. But so far, guys, I'm about to end the stream here in a couple seconds. Be careful. This is a risky time to be taking any trades. If you guys are looking to open up some shorts, make sure to trade a breakdown if you guys can. At this point, it looks like the market still isn't ready to kind of call a bottom here. We're going to be hoping that over the next half an hour or so, we can have some type of, higher low situation work out. But I'm looking at this right now, and I mean, we're still getting shorted right now. There's still a little bit of pessimism in the market. I'll be live a little bit later, probably starting off at 5 o'clock and then going to 7 o'clock tonight. So another 2 hours. I've been streaming today for like 2 hours already, I guess, hour and a half or something like that. But what do you call it? You guys will see me a little bit down the road here, but take your time, everybody. It's definitely not looking too good. Whatever is going to happen, like, let it sizzle out. If you guys want to day trade this, by all means, go for it, but make sure you guys have a plan. Make sure you guys are able to trade a breakout or a breakdown of some sorts. It's going to make your life a lot easier here, guys, okay? And hey, Christine, you got shorts open. I think we could see 19K today. You could definitely see 19K by the end of the day. Just be careful. You do have a pretty big level of support right around that 19,527 level, looks like. Actually, I don't even know where that's coming from, so let me just double check. Yeah, that big level of support from over here. And you also have this Ganfen level, which was a pain in the butt to get down below, but that took a really big move to bring us down. So keep an eye on it. Just watch out for that $19,500 level. Best of luck on your shorts, though. They look like they're going to be doing pretty well, especially where we've gone so far, right? But I'll see you guys a little bit later. Have a good rest of your day, and I will see you guys at 5 p.m. Pacific time, everybody. 5 p.m. Pacific time. And thanks, Kilo. I appreciate it, guys. Have a good day yourselves. And relax a little bit. It's a bad day. It's going to happen. I've used this opportunity to do a little bit of dollar cost averaging today for the long term here. Definitely the long term at this point. But